Welcome to The Nest Show, the podcast that brings you insights into the crypto market, trading and investment experiences, and what we're looking forward to as we navigate the space together. Today, we are joined by SignalFI. SignalFI is the definition of an early investor in crypto. Coming from a background in cybersecurity and BizTech analysis, SignalFI took the rewards of numerous market cycles and invested his resources and experiences into the development of the SignalFI product suite to automatically trade alerts generated by his privately developed trading indicators and strategies. We discuss themes of cybersecurity, the paradigm-shifting experience of generating true wealth, the security bullet points of popular exchanges, and of course, highlight the design and philosophy behind the SignalFI product suite. Our guest today has a true wealth of experience and knowledge to draw on during our conversation, and he shares it with our listeners generously on this episode of The Nest Show. Once again, thank you for joining us, and we hope you enjoy the ride. What The Nest Show is: this is a podcast brought to you by the Birb Nest community, an independent crypto and Forex-centered trading community built to sharpen each other in capturing opportunities in the markets while protecting capital along the way. What this is not: trading advice. We are not financial advisors, and you should not regard any information here or in the Nest Club as financial advice. You should always consult a licensed financial advisor before making any financial decisions. Today we are joined by SignalFI. SignalFI, how are you today, man?
I'm doing very well. Thank you for having me.
Thank you for being here. As we were talking pre-show, I was jumping out of my seat just because your wealth of experience, your skill set, your knowledge base, to give our listeners a little idea of what you bring to the table. You have almost multi-decades of experience in cybersecurity. You're an early adopter of crypto, a technologist, white hat hacker, miner since 2013, day one investor in ETH, hold a degree in advanced business information, pattern recognition specialist. Shall I stop there or shall I go on, sir?
I think you should stop. We'll just close it off right there. I'm not going to live up to that. But no, first of all, I think thank you again for having me on. I think, what you guys have been doing here on the podcasts have been excellent. In terms of who I am, what I do, I come from a wide background of different things. I think from a technology perspective, I think a lot of people that are in crypto find themselves in this space because they have a natural affinity for technology. That's no different from me. Back in my original days of starting this whole pursuit down the crypto dream, it was about cyber. As you mentioned, that's where I kind of started my career early on, and I was involved in some incident response type investigations back in 2010 and 2011, which kind of kicked off this whole party for me. So being exposed to Bitcoin back then actually made me think a lot about what this new technology was going to bring to the financial system. I was not a trader at that point, kind of slowly invested just like we all did back when you don't know a whole lot about the stock market, and being very busy with your day-to-day job. And then as the momentum wave of cryptocurrency kind of started to build up and we had these ebbs and flows of different financial freedom that came and also left very quickly, that kind of led me into building out a new capability set within what I was already familiar with. I had a lot of experience in statistical kind of, I guess you just say, capability from when I went to college. I never really used that other than just being very logical and deductive kind of logic to be a white hat kind of hacker and to do that in my real world job. But, finding those skills again and being able to apply them to a chart where, numbers rule the day, I think was really kind of the two things that interlocked my past experience with crypto and then, in the future, the way that I actually go about trading nowadays, which is completely algorithmically and using different methods from across the whole world, honestly, just to try to find alpha, as they say.
To make a quick digression on the cybersecurity and white hat hacker aspects of your experience, I'm terribly curious for the hacking end and for the nefarious black hat hackers. Do they usually fall into categories of actor where it's, say, one, they just have pure criminal intent, where it's to extract money or to extract a political outcome or what have you? Two, it's philosophical hackers or maybe anarchists. Do you see kind of like telltale modalities of the interest that are on the other side of that chessboard?
Yeah, well, I think there's no easy answer to anything, of course, right? And I'm guilty of probably overthinking things for the better part of my life, but it served me well. I think that the motivations behind what people would say is quote unquote hacking nowadays that you read in the mainstream media is largely consistent of, I dare say, I say crime families, but it could be nation states that obviously are deploying some type of malicious or information warfare is another key word that I think that comes out there. I think the motivations are wide ranging, and I think it really kind of depends on the different type of attack, the target, the actual impact that comes from that target, whether it be financial or reputational harm. The motivations are kind of sometimes dual honed. It's kind of all over the place in terms of who's doing what and why. And to be quite honest with you, a lot of times we don't know exactly what they intend to do with a lot of information. That's a lot of kind of hearsay or speculation, which ultimately isn't really validated until you can find that information out on the dark web, for example. And that's what they had intended for it. They probably have other intents for it, but they also can sell it. And depending on who they're financed by and where they are geopolitically kind of located, I think that it could be either just money or just some type of information campaign that they're trying to get access to, different things that they don't know. So it is kind of all over the board, and it would probably take a long time to go through a couple of examples, but it is, it's very hard to have that as a singular kind of classification in the industry. I think that's why there's a lot of money and a lot of time that gets wrapped up into doing breach response and investigations.
Yeah, it's utterly fascinating. And I imagine there have to be some campaigns that are entirely useless in and unto themselves, where perhaps the hacker is just doing it to obfuscate his central purpose. So many of our listeners and viewers will know your work primarily from your trading indicators. So cool to think about you coming from such a wide berth of experience and kind of honing in that skill set to deliver this suite of services and products to the public. But I wanted to talk a little bit about that journey from cybersecurity, early investor in crypto, and then graduated to trading and active trading, and your progression to building out these scripts and what that's been like for you.
A lot of the people that come into crypto, especially in the early days, and by early days, I mean when a large tidal wave of people came into the industry back in 2017, if you were on that wave, found themselves, for the majority of them, that didn't know to get out at the top. That was their first kind of example of what crypto could do. Those waves had periodically happened in the past, and there was obviously a lot smaller set of people that were involved in these epic climbs from, just nothing to, complete what they call moon. And, for the investor of a very little amount of money, you had a whole lot of money. And at the time, you didn't really have the robust infrastructure for trading that you have today in order to kind of exit to cash. If you manage to get out, fantastic. But I guess what I'm saying is, getting into cryptocurrency early, for I'm sure a majority of them that are now influencers on Twitter, and they own companies in the crypto space. And these are all people that just happen to buy Bitcoin very early or getting involved in some of these new financial products very, very early. And that's not necessarily luck. They had maybe future vision of what was going to go down. But the point is that, for the layfarer kind of investor like me, at the time, I really just kind of looked at what was quote unquote my wealth going up and down and gyrating in a way that I wasn't really happy with, and I thought that there had to be a better way to do that. And then, of course, just like a lot of traders start off with, you have that learning curve that goes on. What is this? What is a chart? Candlestick patterns. What are these indicators that I can put on my chart? What do they mean? And then it's the first, I think, kind of ideas that you can start trading your way out of a particular hole. And then you can start just taking swing trades on, the higher time frames. And these are all things that actually don't, I think, lock into place for a lot of people in terms of what they actually mean from a trading perspective until they go through the rigor of actually trading. But originally, back in the early days when I was trying to figure out how to manage this wealth that I had come into, or just more wealth than I was used to, being able to effectively trade and not have to stare at the keyboard was one of those things that I was really kind of interested in. And I think that my experience with programming in various languages and/or also breaking into different programming languages kind of made me very curious about how to apply those skills to something that I would consider useful by managing all of this newfound wealth. And I think that the progression of that eventually culminated in the development of SignalFI, and then successfully kind of being able to manage not only the money through active trading in crypto, but as I mentioned before, it's kind of like more money, more problems kind of approach. And then, when people, I think, start having more of their focus on preserving their wealth, they start to look and peek their head up at other things that are just generally not inside of their normal vision. If you're, a cog in the wheel and you're working at an office and, you have a job, not to put anybody down for that, but that's just something that dominates your attention span, and you don't have the ability to look at some of the additional things that are available to the people who spend time every day making sure that their wealth is building, and they're strategizing about how to do that in various different ways. And if you're just focused on your keyboard, typing code or writing a new proposal or whatever you do for your job, you're not focusing on maintaining and preserving your capital wealth. And I think that that's the big kind of aha moment that happens as you start to have that initial tidal wave of I'll just say free time or free awareness or free perspective in order to bring yourself out of what is the normal momentum wave of life and really try to actually plan what you're going to do with your newfound resources if you happen to find them. And hopefully everybody that's listening here will have a lot of these resources in the future. We all hope that Bitcoin goes to millions of dollars per unit. But I think that from a psychological perspective, that's the real transformation that comes along with not only being successful in crypto, but also just having more time to focus on your investments and being able to know that it's not really just about one asset, it's about multiple, and really kind of stretching out the risk management capabilities of the whole system as it stands as a whole, not just on crypto exchange. That's the other kind of thing that we can get into as well. I think I see a lot of people trying to make a lot of money in leveraged markets, and they think that that's kind of what becoming super wealthy or super successful is. And I think that that's just, it leads to people being very, it's just highly erratic, a lot of volatility in that pursuit. And that's why a lot of people get burned.
You bring up a number of great points there, and the term paradigm shift is thrown around a good bit. When you can take a step back, and like you said, instead of being a cog in someone else's wheel.
Don't be a cog in the machine, be the guy that builds machines. And that's kind of what I've lived by for quite a while now. It's at that level where you just get to see the battlefield from 25,000 feet and you're not down in the trenches. And, again, proverbially, there's a lot of meaning there, but I think that it's just that perspective, that initial perspective that you need in order to kind of start looking elsewhere about how to actually do wealth management the right way. And I think that leads into things like automated trading solutions, because you just don't have enough time to live your life, be a dad, be a father, whatever your pursuit is in life. There's only so many seconds in every day, and those are very precious. And you want to try to maximize input to output.
I'm fascinated with your paradigm shift that occurred in you. How did you kind of redefine yourself as the manager of your portfolio?
everybody comes into the market when they learn about this stuff, and obviously you have, like you said, with the leverage traders, they have big dreams and they think that they can capitalize. Like they see on Twitter, people posting, insanely high ROIs per trade, and I think that fundamentally skews a lot of what the expectations is for like day-to-day actions that you take in order to actually achieve those things. Some people might be just lucky clicking the big red button and the big green button, and just have kind of an instinct for when to get in and get out. Other people have to prepare themselves in a lot of different ways, both from a technical perspective, both from a psychology perspective, but also just from how they execute their day-to-day lives, and all of that wrapped up together. So, I think for me, if I can connect this the right way, I think that I had an eye for doing more of the automated stuff in general, and that was kind of the track that I went at. And initially, I was hoping to be a little bit smart about it, so I actually dived in. I didn't want to necessarily think that I know how to do all this stuff, and I think that at the time, even then, there's a lot of books that you can go into and even find on Amazon. I'm sure that it's kind of like quant, today the quant word gets thrown around a lot, and it's just how do you build algorithms, and searching from night until day in terms of trying to figure out how I can push this coding element that I already know into the financial markets, and then obviously taking in a lot of the fundamentals that I had not necessarily known from a financial perspective before going into this whole pursuit. Really kind of focus more on the technology security side before this kind of all happened, but knowing, at least from what I believe, I think that people should try to ingest as much knowledge as they can all the time. So I'm continually learning, I'm continually reading books and absorbing different things from all over the place, mainly just to inform my decision, whatever I decide to make that. And I think that the initial kind of understanding of this whole thing was to try to implement a system that could trade as little as possible. So the first rendition of everything was really kind of just trying to remain in the trend as long as possible, and then not having, basically just minimizing the amount of times that I had to do a trade, hopefully capturing the bottom, and then obviously selling at the top or near it. And that principle actually kind of lived with me throughout most of my future development, because it kind of made sense to me from the very beginning that it wasn't necessarily about getting the top or the bottom, but it was very, very critical to kind of define the variables around how I can gauge the middle chunk of, the trend move. And actually today I do a lot of work with diagnosing how you can figure out different metrics for how strong the trend is. And there's obviously many ways in momentum reversion type algorithms that kind of look at those variables and try to define how the price is compressing and escalating into different waves. And that kind of just made sense to kind of go out first, is basically just make sure you get the meat of the move. And from that perspective, obviously the weekly, monthly timeframes were the first thing that I kind of made sure that I always watched. And then as obviously you get more into the details and you get more, experienced and or just confident in yourself, you can step down into the lower time frames to kind of tune up the algorithms to do more than of what you have already proved at the higher time frames. I was actually pretty lucky with this, by the way. Like a lot of people kind of fail. There's a lot of different ways that people fail at implementing trading, quote unquote, and even auto trading. But if there's one thing I can cut everybody down the right path, is just, I tend to try to trade less, and I tend to try to just make sure that I get a statistically good portion of the move. And simply by that function is how I base my kind of my performance. And in that way, I can also kind of remain sane, because there's a lot of pitfalls and traps along that whole kind of process. Because you could look at a chart and you can say, well, I could have made 20% if I just did this. And that's the psychology part that I think that a lot of people, both regular traders as well as auto traders, kind of get into, that just kind of drives you crazy. And it can drive you into a better algo or a better trading strategy, but eventually you got to kind of say to yourself again that that time that you invest in this has to be equal to whatever the return is.
Are you in and out of assets, or do you mainly trade sweetheart assets that you're most familiar with?
Yeah, I'm kind of agnostic to the different types of strategies, to be honest. I think that there's a slew that I've built over the years or that I use, personally to kind of try to capture something that's relevant or that I think is relevant as profit, if you want to call it that. And I think that all of the strategies have their usefulness. All strategies have their positives and their negatives. And ultimately, I think a big part of risk management is kind of diversifying across all the different types of strategies that you would typically read about or hear about on Twitter. You have buy and hold, and then you have all the series of other ones that you could even potentially talk about, including trading and auto trading. And I think that there's an answer, there's a portfolio of different a bit like what people should do in order to kind of hedge risk in any one thing that they do. They should probably try to take a little bit of a piece of each of them. Of course, in crypto, I can always, and from a cybersecurity perspective, I can never really advise anyone to leave money on the exchange if they don't have to trade with it. So the hacks and what have you that have happened in the past are only just affording a kind of conclusion that they'll happen again to a higher or lower degree. It doesn't really matter. The point is just from a good custodian of your wealth resources, you want to make sure that you're taking every step you can in order to basically secure that wealth. And crypto gives you the obvious ability to do that with technology that's never existed before. Be your own bank, store your own keys. Those are things that are very important. But that doesn't really help you do auto trading every day, right? Because you're not going to be able to do that. So then what do? Again, it's about risk management in terms of allocating your different, channels of how you're investing, whether it be auto trading or day trading or long-term trading because you want, you think that Link or another asset is going to go up in the future. It's just kind of again, when you have time to plan at a higher level about all the different things that are available to you, if we're just talking about crypto trading in this example, you're not just thinking about, I have to day trade and then sitting at the computer for 8 hours and trying to catch the next drop in the next, top. That's not what a long-term stable wealth manager would do with their money. It would be kind of making sure that the portfolio allocation across all the different channels are accurate given the level and degree the market is currently moving with advanced macro metrics. We do track price action, and a lot of the algos and this indicators that we obviously release in SignalFI they're all momentum reversion based. But that's only one metric, and there's a usefulness to that, but it's limited because it doesn't take into account a lot of the fundamental stuff that is out there. So I guess what I'm saying is I try to take part in diversified risk management across multiple different channels. That way, no matter what, and this probably comes from my mind later on as I grew into understanding portfolio management, I'm really just trying to build this linear kind of equity curve. And I would love for something to go absolutely parabolic, but at what I'm most interested in is just a very stair-step rise over time. As much as I can smooth that equity curve out, the better that I'm doing.
Just as a quick side note, your last bit in terms of a smooth equity curve kind of spoke to me for Renko bars.
I use Renko as well as I kind of get a perspective from all the candles, actually. I don't independently use one nowadays. If I'm just sitting at a terminal and let's say I was doing a live trading session, I wouldn't just stay on one type of candle. I'd probably be across all three of the big ones. So that'd be Renko, HA, and normal candles. And, Renko is extremely valuable, I would say, in terms of the noise that exists in the market. When you have a new trader coming online to learn a lot of this stuff, I think people, generally speaking, can find for a large portion of the population, if they didn't see candlesticks first and they just looked at a Renko chart and then they started trading the Renko chart, they might be more successful on some kind of statistic percentage. Just because I think that it cuts out a lot of the noise and it cuts out a lot of the subjective kind of pattern recognition that we all have, that we all try to do in everything that we do every day. I think that that's why so many different contexts and different different indicators are perceived different ways. And and no matter what indicator I build, I can get 500 questions about how it works. And it's kind of like, to me, I'm like, how do I have to explain that just this way? But that's the point about the pattern recognition that usually goes on with people. And I think that Renko really helps collapse a lot of that into something that's very consumable. And a lot of the indicators that you'll find that people use, if you use them on Renko, the indicators are actually a lot easier to understand as well. So I think that those two working together and just kind of understanding at the beginning how Renko is calculated and how it works can be really powerful for new traders.
Awesome. And that brings me to my next query about your script work here. For instance, I'm looking at the screen share that you have up right now, and across the board, your indicators and your charts are very pleasing to the eye. I don't think that the importance of that can be overstated. Like, if your eyes grow tired from looking at the chart, then it means you're just like every other trader. Your eyes are eventually going to go tired from looking at the chart. So it's important to make the chart as agreeable to how we can metabolize that visual information to put it into an actionable plan. And I feel like your charting style or the visual style does a great job of making it palatable, and making it actionable, while at the same time delivering a wide swath of information. So I wanted to give you kudos on that.
Oh, well, thank you. No, I think that's always the case. I mean, I think like one of the things that obviously aesthetically, yes, you have to be able, if you're going to be staring at a chart every day, you best like to stare at it, right? And more than anything, I think coming from a statistics world, and just learning all the time, I kind of have always relied upon this idea of chunking, right? So how fast can I look at something and be able to determine what I need to determine about it? And I think that that's also the subjective nature of all indicators out there. It's like, if you were to ask anybody, any one of the indicator developers, what they see when they look at an indicator would be completely different than if for example, people who just see this on the screen for the first time, they say, oh, it looks pretty, nice colors, and I can see that it's red and blue. My blue means up, red means down. It may not be as crystal clear what's going on at the level of the code, but they can at least see that there's these segments of the market that are moving, and you can kind of see clear, defined starts and stops of different changes of the line going up and down. And if you just kind of try to go at it like that, SignalFI, the way that we try to work with people when they come in and use the indicators is to tell them that this isn't like a buy and sell indicator where you just are going to buy one signal and sell one signal. This is really trying to get you to look at the price action a certain way so that you can build your own kind of system around what makes sense to you. We'll give you all the tools that we think are necessary to get you started. The indicators give you kind of a backdrop of different things about how to analyze the price action based on what traders have kind of found very useful. And then there's hopefully some additional elements in there that make it easier to kind of make those gut decisions about when you need to enter or when you need to exit. And that chunking ability that you see on the graph and making those decisions about trading ultimately, I think, is what leads to successful traders. It's being able to find confluence with whatever your system is and being able to, set your risk management and then walk away. And as soon as you can start making those decisions based on a set of data that you look at on the chart quickly and without emotion, I think that that's when a lot of traders kind of flip the switch and start realizing what type of quote unquote video game you're playing. If it's emotional, then you kind of do a lot more emotional work and spend a lot more energy than you really had to if you just knew how to look at the price a little bit differently.
And right now we are looking at, is this Prime?
Yeah, so right now we're looking at Prime. This is what I call the flagship kind of script right now. It's really like a system, like I mentioned, for people to kind of look at the price action. It's based on Ichimoku in some ways, and we use various elements from it, mainly the baseline, to figure out a main trend. And then what we did with Prime in general was we tried to wrap in a bunch of 3 different indicators that are well accepted in the industry. And of course, everybody's heard about RSI and maybe not so known as Awesome Oscillator, but those are a couple of our favorites. And what we did is we repackaged them into just a different format, and so that they could be used together with Prime, the primary indicator, to try to give you an idea of when the market was shifting, and to be able to inform you and for you to be able to build your systems around these, again, chunks of data that make sense to you and your risk tolerance, so that you could plan and execute a trade. Just to give you an example of this, so Prime, for example, comes with a slew of different indicators and signals, but let's just take this bottom, obviously rise up, and then obviously the fall that came back down. This is on daily. So, first of all, price always revolves around some type of band, and everybody has maybe heard of a Bollinger Band before, and that's great, but it's highly reactive. And one of the things, again, I mentioned before, is I try to take the longer approach at a trend and get the biggest meat of a move, whether it's up or down. So in that sense, this band is really kind of exemplifying an extreme of the current price information or price action, which is why you're seeing the candles always popping right above the band. And it's meant to never really be breached. It's meant just to be giving you an idea of when price is topping out, because eventually you'll see the candle start falling from where this mean is, and it's just basically a smoothed out Bollinger Band. But I guess the point is, you always want to have a good idea of how far the price can move up or how far the price can move down, just to kind of give you an automated way to look at the price chart without having to draw a Fibonacci retracement or some other comparable thing that you've seen before, and just kind of know at a glance what is the highest level that could go, what is the most likely lowest that it can go. And there are exceptions, like we see right here, but having that, again, chunking behavior when you're looking at on 1/1/20, what am I thinking right here, you're going to know that you basically have this range to trade in, and then obviously we try to wrap that information in other indicators like these pivot lines, which will continually update as the price falls over or under some significant level that is defined by the major trend information. So, again, it could be, it's meant to be a system that adapts to you, and you can automate it as you will. There's a bunch of different signals that give you, just to give you an example of how this would work, you could easily decide that you want to take early entry signals, which would be something like an RSI cross, where you have an RSI cross over an RSI signal line, or you have your major kind of flips of the EGMA trend that you're wanting to go through. But I guess in this entry down here, where there was a cross and there was a primary entry, not only did you get an RSI, and maybe you weren't convinced about that one, well, then you get another signal, the next bar, that says, okay, I'm twice as sure now, RSI is over this key significant level. I've got blue here, I've got blue crossing up in your awesome oscillator. And then if you still weren't sure, you're coming over 2 very significant levels that are also painted on the chart. You're breaking over a high bar right here that was started, a couple days earlier. And then you're also starting to rise and getting an actual, like an AO signal bar here, which is this blue up and down shading. But I think from an ease of just kind of understanding, when you're looking at some of the indicators that we build, it's all about confluence. It's all about seeing the price for, where most of the indicators or most of the things that you would look at to make a decision are agreeing with each other. And that's where you would try to target your trade. So in this case, again, this is kind of done for you for each EMA. And prime, this blue box right here denotes the actual most strength of the trend, when price is most likely to go up. So if you have all these agreement and all these signals and you're in a blue zone, that is meant to tell you that this is a good time to go long. And conversely, you have that same kind of scenario happen on a way down, where you get an advance notice about price changing direction on RSI. Awesome oscillator gets you across here in terms of a signal line. And then you get the next signal 1, 2, 3 in a row. And then finally, if you weren't convinced, you had to exit at that point. You start crossing and building a new pivot line here that tells you that you're actually just building resistance at this particular spot. And so, again, this is kind of meant, when it's understood, to kind of be a gut check reality for telling you how strong the trend is and giving you multiple signals to get out depending on what you hold as a bias. I think that that's also something that we find happens with a lot of traders. Oh, I see the signal. Oh, I use this indicator. Oh, I still lose money. And why is that? It's most of the time because people haven't adopted and automated the system completely, or they see the signal and then they have something that happens psychologically where they decide, because they know better, that they're not going to follow the signal. So the idea with each EMA, for example, and this whole system together, is to give you continual multiple different signals about confluent trend direction, so that you can convince yourself not once, twice, 3, 4 times that you need to be taking a position in one side or the other.
Yeah, and you bring up some great points there. I mean, the truth is that the TradingView script marketplace is populated with a bunch of opportunists who are simply looking to leverage the naivety of new traders, who are looking for the silver bullet to kill the market and to have 90% win rate and just automate the stuff and retire within a couple months. But the truth is that the market is going to be full of noise, and you can have 10 traders, 10 profitable traders in the same room looking at the same chart, and they can all give you a different bias and, support that bias with their experience and, trade it according to their system. And even if one's going long, one's going short, depending on the time frame or the strategy, all could come out winners, So I think that it's just important for folks who are getting into this to understand that there's. I'm not going to say that there are no shortcuts, because there will always be ways to leverage opportunity, timing, and knowledge and skills. But you aren't going to do yourself any favors by neglecting hard work, self-education, etc. So I like that you're giving it straight. There are going to be a number of sometimes conflicting, sometimes confluent indicators that will ultimately write the chart. And I wanted to ask you from your a cyber and tech background, how are you personally implementing this system in an automated way? Like, are you using AutoView or some kind of other platform to hook in your APIs, or did you have your own self-designed platform? Like, how do you go about automating your strategies?
Yeah, well, we do provide a walkthrough on our Discord, actually, about automating each EMA prime or the prime system in general. So this whole system can be automated, and then we give guidance for how to do it with. And to be honest, any of them could be used as long as they can take a signal from TradingView. So we've actually seen people on our Discord, we actually have a walkthrough for using Alertatron, just because it's very extensible in terms of its back-end support engine for how to manage trades, stop losses, take profits, scaled orders, a lot of that more advanced processing that's available to the retail market is nice to have, and it's specifically implemented pretty well in Alertatron. So that's actually the walkthrough that we usually take people through if they want to automate one of our systems. And then, but otherwise, if this is the first time that you're hearing about, auto trading, different scripts, I mean, you can use a majority of them, and a majority of them have their limitations and good things that they do is good as well. You have 3 commas, auto view, profit view. They all do the same thing in terms of either taking an alert that you set here from the alert that you set here from TradingView. You can send any one of these alerts to any one of these providers, and as long as they can connect to the exchange, you can execute a trade. It can be margined if the exchange supports it or not. And then you can also, at least in this particular environment, with this particular script, in terms of selecting what you want to exit on, you can even take profit, set stop losses, any one of these different signals that you would see on the chart. So I don't have a bias for each one of them. I think that each one has, their goods and their bads, and people might be on exchanges that you might have to use one versus the other. But they're all possible, and the actual infrastructure amongst them all is kind of the same in terms of executing trades. And personally, that I've got a hybrid kind of completely standoff system that we run everything through, that has kind of grown and been adapted over time to do a lot of other kind of signal processing from outside of what I would call just the candlesticks. So we'll absorb data from things like the hashing of the network. These key fundamentals that you kind of have in the crypto world that are the only fundamentals that you really have in the crypto space. Transaction volume, new users, social media sentiment. These things are the FA of the crypto world. In the normal stock market, a lot of this analysis can be done in a lot of different ways because there is actually fundamental analysis that you can do. And the crypto world is kind of a little bit murkier in terms of what do you actually use that's not on the candlestick chart. So in order to do a lot of that analysis, you have to have a system that's not in TradingView, and obviously that's why it'd be nice to get into understanding if you have that kind of idea or you have a background in coding. There's a lot of free available information in crypto that you can actually use in order to build, for example, like a Python-based system that does your auto trading, that also sucks in different order book data that you're not going to necessarily be able to use on TradingView, for example. And it just kind of opens you up to the idea that you can do this signal processing in an easy way. And if you have, again, if you're in this kind of field where you do programming or something like it, you don't even have to really do that, because I didn't when I first started. You can still make a pretty cool system, to be honest, if you just have a little bit of persistence.
Coming back to the Alertatron for a moment, do they offer conditional trading parameters? Like, let's say, you were to say, okay, open a long position only if, or only when at least 3 of these 5 parameters are met, and close it accordingly. Do they offer for that, or is it?
I do think that they do. Yes, they have multi-tiered statements that you can build into their signals. So that's actually why I suggest it's not that the other ones don't do something similar. It's just that they're kind of limited in that approach. And Alertatron's done a good. They've done a good job so far. Again, their documentation is pretty good too. That kind of demonstrates this, the different types of orders that you can do, and then being able to have multiple stages of the order get processed by the same signal. I think it is pretty robust in terms of comparing it to other competitors that are out there.
Awesome. Well, I will be when we finish this episode, I'll be hopping on over to your Discord to learn more about this. As far as the charts and various Yeah, and instruments and scripts that you employ. Are there any other visual cues that you'd like to share with our viewers and listeners before we wrap things up?
I just let you know, I mean, SignalFI in general gives, we do have 3 free scripts that we like to start people off with. Each one of them has a different function per se, but these are those ones that they can get for free today. And again, they all have their functions. I think just very quickly, we have PivotFi on top, and that's really just a way to always have an idea of where your key supports and resistances are. This can be done many, many different ways, and there's many scripts that are available for people to leverage on TradingView to do something similar. But in terms of my inclinations for how I built this script, I'm very much into the Fibonacci series, and using that type of just understanding of what I feel like the markets are based on more, and my subjective opinion about those numbers and what they do in the world. In any case, that's kind of what is deriving these pivots and the painting of these pivots on the chart. You can kind of see how they exist, and they do tend to wrap the price action and give you indicated clues about where the tops and the bottoms and where support and resistances are going to be. So if you're planning a trade, you could easily use this as your helper to create stop losses and or take profit events just by using your position tool. You know, if you were down here, for example, and this is, you know, a line that you were watching as red, and then we had this break above, which happened at 7,400. You could easily, you know, just use this as a way to say that you wanted to take profit on any one of these past pivot lines. And most times, if you back tested it, and we have, you know, those are going to be pretty significant levels that you want to be able to target as you trade. So again, that's just a different automated way to look at the different price action as it's forming, and not really having to do a whole lot of work to find out levels that mean something. And then right down here, another free one is SignalFI, which is another just easier way that I had put together in order to look at what volume is doing. You know, I think volume bars tend to be incredibly important when you learn how to use them effectively in trading. But I think that they really aren't utilized a whole lot by new traders. So this is kind of the idea behind SignalFI, is just to kind of give a nice simple up and down motion of price volume relationship, and that have that be a gauge for how you enter and exit a trade. Just kind of another validator against whatever other bias you have on your primary chart. And then finally, CognifY is something completely different. I'm not even sure if there's really a comparative to it, but it's basically meant to be a wave kind of indicator that keeps you in and out of a trend where it's looking at something that isn't normally calculated. And I guess you could call it derived on RSI, but it's not truly that. But if you were to look at it, it can be used in the same method as an RSI. It's just very, very slow, so that it is making you stay in this larger arc of a trend. And as the, again, colors change from red to blue, you should start thinking about what your bias is for this particular trade. And as you see, for example, you know, these red ideas to start popping up on the graph based on whatever indicator you're using, this doesn't have to be with SignalFI, but just all of them. As you start to see confluence around what you're seeing on your different indicators, this should really start to form your bias about how you're going to take your trade from now on. This is clearly if you're using these 3 indicators, that's 3 different synchronous events. That means that you should be having somewhat of a bearish bias here, which means that statistically you're going to be taking short trades instead of long trades until you reach, you know, back down to whatever level you agree to is support. So again, that is just an easy way and tool that we give new people coming in to try to get involved with us and see that we're just trying to train you how to see this confluence with multiple different indicators.
That's great, man. I love that CognifY. A really neat looking one. I'm looking forward to checking that out. Well, SignalFI, I really appreciate the work that you've put forth, to expand the repertoire of young and budding traders, as well as, intermediate and experts alike. From our talk pre-show, and your successes in various arenas, you really haven't had the need to do this. And I think that conversely, that shows up positively in your work. That it's not hungry. It's not, shilling of like, oh, this is the one indicator that's gonna bring down the market and buy you your C8 Corvette, or whatever the hell. It's tried and true, and anybody who visits your work in earnest will be very impressed with it. So I appreciate you sharing that.
Thank you. No, I appreciate that. One thing to just mention there too, it's like the automated stuff, right? So I think we touched on it, and I want to make people know that that's you hit the nail on the head with that. It's so very easy to have a false kind of just a false statement about what you're going to have as a return in automated trading. There's so many things that go into it, and I do feel that there's a lot of tomfoolery, if you would call it, just bad. They don't. A lot of times they don't even know that they're doing it necessarily. It's just that they haven't been through the rigor of understanding all the real details behind it. And I think that TradingView obviously makes it very easy for you to quote unquote backtest something. And I think that backtest can has a slew of different fallacies with it that aren't necessarily known to people. So it is from our side, whatever system that we provide, it's going to be realistic returns that are backtested in real environments, and that's kind of what we hope is beneficial for people to know. And I don't really release a whole lot of those automated systems, mainly because of that fact. You want to have a very stable system that works and that people can't really abuse if they decide to take it into their own hands and play with the settings or what have you. And I would feel bad if people started to lose their money on that from that perspective. So that's why there's limited kind of botting stuff on our Discord, other than this Prime series. Whenever we release something, it would always be kind of battle hardened and tested that it's actually going to at least do more good than bad.
Awesome. Before I let you go, I had kind of a lightning round of questions that I would love for your input on. Are there any exchanges that you feel more secure with, or any exchanges that you wouldn't let your coins be on for a hot second based on security track record or what you know of their back-end security?
An easy one, I would say, or an easy way to answer this is one that all exchanges are going to say something that they do, and they'll maybe even present something to you on the outside face that sounds great, and maybe even be a certification that they say that the data center has, or what have you. And I just, from the cybersecurity angle of it, you always have to be very careful about what real world implementation of those ongoing pursuits toward being, whether it be compliant or be secure. All of those things have to happen at a very, very, very high level and degree, not only when they get those certifications, but also after the fact. And a lot of the times, the certifier or the level and degree that they operate those controls with afterwards, they get those certifications, may not always be something that you can rely on. So I think that this happens across the board with many different companies across all industries and sectors. So I think that there's just generally a proclivity to have security issues no matter what. So what do you fall back on in terms of risk? And I would think that in general, exchanges, if they have, or they could have some type of insurance protection, when we have clients and we say, can you, no matter what you do, I'm going to be able to hack you. And they say, okay, well, what do I do then? So they say, well, we manage that risk. We need to buy some insurance, or we need to offload or accept some other different way of doing business so that we can kind of try to cut out this risk somehow. And from an exchange perspective, there's not many that do actual tangible insurance of funds, but there are a few. And I think that if you're trading a lot of money, or if you're doing a lot of trading and you may be worried about just in general the coins being hacked, you want to have the highest degree of what I'll call quote unquote like custody controls over those assets when they're under management. So that would be, at the end of the day, even if they get hacked, you would need some type of insurance backdrop to kind of replace your funds, even if that did happen. And that's what I would kind of look for.
Awesome. Off the top of my head, I mean, I know that Coinbase, FDIC backing, does that hold any water for you?
Yeah, Coinbase is a good example. It's an example. They are one of the exchanges that they have like their own insurance policy, right? And that guards them against some hacking event for, I think it's $233 million. That if they get hacked, you're covered there, at least up to $233 million. And then if you have an if you have a cash account there, and it's not in digital assets, but it's in cash on Coinbase, they have it set up where it's a pass through to their partner bank that it will be covered under FDIC. So technically, from Coinbase, you're protected whether or not you hold cash there. And that would be an example of a good exchange if you wanted to be hyper-regulate, and there's just not a whole lot of them.
Yeah, I mean, to be frank, there's a lot of rigor and a lot of hoops that you have to jump through in order to accomplish that. Basically, same question for your personal storage methods. Do you trust one hardware wallet over another, or do you think it's splitting hairs? Like, what's your take on the hardware wallet market?
Well, I'm actually looking at all 3 or 4 of the major versions right in front of me on my desk. So I tend to have them.
Oh, yeah. There you go.
I have them all. We take looks into, from a security perspective, them all the time. And I kind of end up moving them around based on what's currently available to everybody in order to update and what we think is the best place for hardware storage. If they have to be on a hardware wallet, of course they could still be in paper in a vault somewhere, right? It doesn't have to be in a hardware wallet necessarily. But I think that in general, this is kind of like with any kind of operating system or software, you want to make sure that there's a competent company that's pushing out updates for flaws, because from the security aspect, there's always going to be new vectors that we try to press into in order to get access to different things that are valuable. And it's one thing to have a vulnerability that exists one day. It's another thing to have multiple vulnerabilities exist that are not fixed. And I think as long as the provider from your hardware wallet, whether it be KeyPass or Trezor or whatever, they just need to be able to demonstrate that they're actually sending out those security updates or just general OS or firmware updates on a consistent basis when there is something that goes wrong. There's been plenty of them documented online that have gone through this cycle of vulnerabilities, and then they have to release an update. And that would be my just general kind of, not that people have to do that, but know that, there is a couple big players, and in general, they've been trying to keep them up to date. And I would just try to try to use the ones that are obviously a part of the bigger market, mainly because they have more developers behind them that are actually using the vulnerabilities that get identified in order to fix the software that runs them.
SignalFI, I got to say, man, you've been terribly generous with your time, your expertise, your knowledge, and your experience on our podcast today. And I can't wait to have you back and continue to deepen my connections within your community. What is the best way for our listeners and viewers to connect with you and your work after this airs?
Sure. No, thanks, Ben. I think that you can do signalfi.net to get access to just kind of an example of what some of the things we've got going on. All the links are there for the Discord or Twitter or what have you, and I'm at SignalFi _, actually on Twitter. So it's SignalFi _ on Twitter, and that's primarily where you can get updates from me, as well as our Discord, which again is on the links from Twitter and signalfi.net.
Right on. And as I am keen to do, I wanted to give you the opportunity. Do you have any last thoughts or final musings that you'd like to leave our listeners thinking about?
Sure. Well, I just thank you again for starting up the conversation and having me on, and of course look forward to coming back and talking about all things that are related to crypto world. Again, we kind of, or at least I personally track a large swath of the technology areas that go on not only in the crypto markets but also in adjacent technology stacks that kind of get implemented throughout whatever the ecosystem is, or just general technology development. And it's very interesting to always see the different movements of the chatter going through the mainstream media and how it's actually going to play out. And that can be a completely different conversation I think we focus on next time. But again, last comment would be, if you get involved with the SignalFI site and the indicators, there's a slew of different information that's available on both the Discord as well as the website, different medium articles about how to use them. And of course, if you have any questions for how they're used, we have a pretty active Discord. I think there's more than 275 different people that are always in there, in and out. So there's always someone there to kind of answer any question you have with how to run these indicators. And again, it's more than anything about trying to give you a system that you can grow and build yourself and be able to own it and kind of take pieces from each one of these different indicators and build them on into something that you can actually use to be successful. And that's always been the real goal of SignalFI. So we definitely try to help people learn how to trade, not just give you an indicator.
Awesome. Well, SignalFI, thanks again so much for being with us today. And once again, to our listeners, thank you and happy trading. I'd like to thank our listeners for joining this episode of The Nest Show. We invite you to connect with our guest on Twitter, where SignalFI can be reached at SignalFI_. And I am at BenjaminT1717. Additionally, SignalFI's website can be reached at signalfi.net. If you've appreciated the depth and breadth of what you've heard with us today, subscribe to our podcast and find our landing page at thebirbnest.com. We have a vibrant Discord community which acts as our central hub of operations, and we welcome you to join us at thebirbnest.com/discord. We also offer an extensive free bulletin on emerging crypto market trends, exclusive undervalued gem reports, and in-depth expert technical and fundamental analysis at thebirbnest.com/bulletin. We always appreciate engagement from our community, which of course means liking the video and subscribing to our page, where we insist on bringing you the highest quality content available. Also, we're happy to incorporate tips and topics from our listeners and encourage you to email us at thenestshow@thebirbnest.com. This podcast is brought to you by the Birb Nest. Thank you, and trade on.